All right, we are now recording, Kay, if you want to start.
Welcome to the Global NPO Coalition on FATF's webinar. This is December 12th, 2017, and today we are looking at solutions for nonprofits' banking problems and next steps. 2017 has been a year of great progress for NPOs advocating for solutions to the banking problems we have been experiencing over the last several years, both with research coming out, the launch of the World Bank and ACAMS multi-stakeholder dialogue process, and other steps. But now more work will be needed in the coming years to bring this progress forward and turn it into concrete solutions that makes it more possible for us to do our work. So today we have a very full agenda with speakers from a number of countries providing updates about the good work going on at the country level, a review of the research that has brought us to where we are to date, a review of what is going on with the World Bank ACAMS multi-stakeholder dialogue, and also some information about research and exploration on potential use of cryptocurrency in this space. So I'm Kay Ganan, Director of the Charity and Security Network and co-chair of the coalition and the moderator today. We're going to start with a very quick review of two research reports that have come out in the past year. First, the Charity and Security Network reports that Andrea Hall will summarize for us. Andrea?
Thanks, Kay. In February, we published our report on financial access for U.S. nonprofits. It was and still is the first ever empirical data on the problem as it relates to nonprofits trying to access financial services. We were surprised to find in our survey that 2/3 of all U.S.-based nonprofits that do work abroad are having some sort of financial access difficulty, and a really good share of them, over 15%, encounter these financial problems constantly or regularly. We found that the most common problem is a delay in wire transfers. And by delay, we don't mean next day or 2 or 3 days later. These can last weeks and even months in some cases, with a serious impact on programming. While account closures and refusals to open accounts seem like small problems by comparison, they do have a very significant impact, as anyone who has suffered that can tell you. On the right, the pie chart shows that another surprise for us, we expected the wire transfer delays to be headed to maybe the MENA region or other fragile states, conflict zones. Instead, we found that wire transfers destined for literally every corner of the globe are seeing delays. And down at the bottom, you'll see a chart that shows the workarounds that nonprofits have created when they're unable to access traditional banking channels. Most often, they are able to perform a transaction successfully later. Again, later can mean weeks or months. With an impact on programming. But at the top, you'll see 42% of our respondents told us that they resort to carrying cash when they are unable to send a wire transfer the traditional way.
Thank you, Andrea. So in March of this year, the International Human Rights Clinic at Duke University School of Law and the Women Peacemakers Program in The Hague released a report entitled Tightening the Purse Strings, What Countering Terrorism Financing Costs Gender Equality and Security. The overall finding of that report is that as a direct and indirect consequence of counterterrorism financing rules, women's rights organizations have lost access to critical resources, as well as the ability to fully use banking facilities, with the result being they are squeezed between terrorism on the one hand and its response on the other. To give an example of that squeezing, 86.67% of respondents had classified their work as contributing to countering terrorism, including through upstream effects, but 90% indicated that counterterrorism measures had an adverse impact. Andrea, can you return to the previous slide, please? There were 5 core impacts on women's groups. Number 1, the use of counterterrorism financing to reduce money and space. So for example, nearly 50% of women's groups reported that counterterrorism financing demands had impacted their access to funds, and a number also turned down grants due to the demands related to CTF. The second core impact was an impact on the programmatic partner and beneficiaries. The third impact is one related to financial exclusion and restrictions on access to services. Andrew, would you mind going to the next slide? In particular, as echoing the findings that we just heard from Charity Security Network, the issue was not so much account closure, but rather extreme delays in or not receiving funds from donors, which has extremely adverse impacts on the ability for organisations to operate. The fourth core impact related to the prohibitive costs of due diligence and other administrative burdens. Here, 85% of respondents had indicated receiving increased demands from donors, governments and banks, which they were particularly ill-equipped to absorb as small grassroots women's organisations. The final area of impact related to extraordinary insecurity and adaptive measures that groups had to take to continue to receive much needed funds. Just to note, for example, that 15% indicated that they had been surveilled or harassed under counterterrorism financing, and they resorted to a number of adaptive measures, including a large percentage of carrying cash.
Thank you very much, Shane. Next, we'll hear from Sue Eckert, who was co-author on the Charity and Security Network report, but is also an adjunct senior fellow with the Center for New American Security and is working with the World Bank on the multi-stakeholder dialogue. So, Sue, look forward to hearing from you.
Thanks very much, Kay, and thanks for all of you for tuning in. One of the primary recommendations out of the Charity and Security Network report was that there needed to be a stakeholder dialogue in which all parties, governments, the charities and nonprofits and the financial institutions needed to come together to address these important issues. The World Bank had a number of studies underway about de-risking. They had focused on correspondent banking and money service businesses. And as a result of that, in June of 2016, they convened a meeting to talk about all of these issues. For the first time, really, the nonprofit, the implications of these issues for nonprofits was put on the table. As a result of the discussion that took place then, there was a specific stakeholder dialogue which was launched in January 2017. And the feeling was, particularly of the banks and the nonprofits, is here is an issue that we can work together on and we can make some progress. As I said, all policymakers, policy and regulatory, financial institutions and charities were at the table. And as a result of the very detailed discussion of the problems, 4 work streams were developed to be able to try to come up with concrete, actionable solutions to some of the problems that charities were experiencing. The first is really to focus on more information. It was surprising the degree to which these various communities don't know much about each other. In particular, I would say the banking community know much about nonprofits, and nonprofits, perhaps the demands on some of the banks. So we started a process of developing information exchange, and this is to help everyone understand what's required in onboarding and managing NPO accounts. In addition to that, what we've tried to do is to provide more information. The objective is to provide more information about what charities already do in risk management practices, in internal controls, etc. So as a result of this first work stream, which began basically in earnest probably sometime mid-year, the next slide will talk a little bit about where we are, the results to date. And here we find that we're in the process now of gathering the types of questions or forms that banks have asked of charities in banking them. We have not had as much of a contribution as we would like, and so I'm going to put out to all of you to try to get additional information. Again, this is not something which we're interested in the name of the bank or the charity, but rather the types of questions that banks feel that they need to have answered in the process of doing financial services for nonprofits. The objective is really to standardize the information request, to develop basic due diligence questions, and then what would constitute enhanced due diligence for those charities who are operating in high-risk areas. As the other stream of this, as I mentioned, is really to try to get more information out there about what charities already do in internal controls and due diligence for donors and for their own internal purposes. The second work stream is focusing on technological solutions. The primary focus to date that we've discussed is really to develop a repository. For those of you who have dealt with NGO Source, you may be familiar that there's a database for grant-making organizations that provides basically a one-stop shop. It's fee-based, but all of the information about the NGO is there in the database. And the idea is that banks could then subscribe and receive comprehensive information about NPOs, saving costs, expediting the process of review to get charity accounts up and running. Above and beyond that, however, though, is something, this whole notion about alternative technologies to facilitate payments. This is something that was touched upon in the Charities and Security Network report, but not much emphasis given. So I'm very pleased to see further work that's being done right now in a report that we'll have today. For purposes of the next slide, the results are that we need the information first to really go forward and develop a utility. And so that discussion about the utility is being postponed until we have more. So work stream 2 will begin in earnest, I think, next year. The third work stream that we've focused on is to clarify regulatory requirements and develop risk guidance for banks. And here we found that there was no guidance, in fact, issued to banks for implementation of the revised recommendation 8 of FATF. Banks told us in the course of the study that they were not going to respond if there was no specific change or guidance out of the regulators about how they should treat charities. And in fact, the bank examination manual had not been changed in many years. So the primary objective or the first objective of this work stream was really to update the regulatory guidance to reflect current findings and reality from FATF. In addition to that, however, the notion of training, and this is training of NPOs about bank requirements, this is training of regulators about what type of work NPOs engage in, and then of banks of NPO operations. So a comprehensive training program about risk management and due diligence. And the third area was really, there are some situations in which banks are not providing and will not, because of the degree of conflict or violence, provide a viable banking channel into certain areas. That being the case, we need to look for alternatives or specialized channels to be able to move funds to address humanitarian crises. In this particular work stream, we've been pleased after a number of months of working together, first meeting as a group, all of the stakeholders, and having the initial dialogue, but the banks and charities working together very collaboratively to develop revised language that could be used for revision of the bank manual, the FFEIC, or it's called the BSA AML manual. And after some very good discussions, I'm pleased that we were able to come up with a consensus, and we submitted language to the U.S. government in October. The government has underway some other high priority issues in terms of beneficial ownership, and they are expected to take up the recommendations early next year and to engage with the group again in terms of the range of issues and questions. We look forward to that. The humanitarian corridors, there has been some good work that has been done in Europe. We are trying to marry up efforts and to understand what has been done in that regard, but the research has begun into how that could be done now, but we have not moved forward and hope to do so early next year. I should emphasize that this work stream really is is to try to emphasize and encourage for banks a risk-based approach to managing charities. As some of the banks noted, there's always going to be risk, but you can manage that risk. And the question is putting in place the kind of cooperative engagement so both the charities and the banks feel that they are comfortable with management of that risk. The fourth area is really to enhance communications and outreach. And here we felt this was particularly important given that there seems to be a lot of misperceptions out there. So we're in the idea is to provide a one-stop shop of online resources about what charities do, about the kind of services that exist, which are measuring or, the charities' self-voluntary guidelines that charities subscribe to, and to put this all together in one place so regulatory policy officials and banks can understand better the kind of business model that charities are engaged in. Here, we have been able to work with ACAMS, and I should emphasize that the World Bank originally had done the research on de-risking, but ACAMS is the Association of Certified Anti-Money Laundering Specialists. For those of you, we have this knack of giving lettered acronyms in the U.S. to everything. But ACAMS is basically the big body of people who do compliance efforts. So these are people in the banks who are working together. We've begun the process of creating webinars, discussion forums, and this we're expecting that the website will be up at least on a preliminary basis by the end of this month. And we're going to continue to add sources of information. So those of you who are out there working on this issue, continuing to work on, we very much hope that you'll feed that in, and this will be a place where everyone can go to get information about banking NPOs. Now, as to the way forward, and where we're headed at this particular point, it's encouraging to see that when you compare to a year ago, there really is so much more of awareness of the financial access problems that charities are having. There's new conversations that are taking place in Europe. I've just come back from Europe, both in Brussels and the UK, and I'm very pleased that we have reports on those during this session. We're aiming to have sometime this winter actually a meeting in Europe that would really bring various perspectives of what the problems are and what various approaches are to be able to address these financial access problems. But let me just here put out a plea to everyone that it's important that we continue to know how financial access problems are manifesting themselves and how they're evolving. We have snapshots in time from some of these previous, the Duke study, Charity and Security Network study, etc. But we need your help and support to provide examples of how it's currently manifesting itself. These real-world examples, I think, are the most compelling evidence and arguments for governments to pick up the mantle and to make some changes. So we sincerely hope that you'll engage. We will be having a meeting in Washington this winter of the World Bank ACAMS process to assess where we've been this past year and where we need to go. And so finally, let me just say that this is an open process. We welcome suggestions, as I said, examples, recommendations. And my colleague Emil, who is traveling right now, or myself, working with the World Bank, would be very pleased to have your suggestions, ideas, and your input. Thank you very much for organizing this session.
Thank you very much, Sue. The potential of this whole multi-stakeholder dialogue is very exciting, and we're happy for members of the FATF NPO Coalition to participate and have the opportunity for input. So if participants are interested in doing that, you can contact Sue or also contact the coalition. Next, we're going to hear from Jerry Brito, who is director of the Coin Center. Sue mentioned the need for exploring alternative channels and payment mechanisms, and one of those may be cryptocurrencies. Jerry is an expert on that and is going to provide us with some background on what cryptocurrencies are, how they work, and how this might be an area for nonprofits to explore. Jerry?
Thank you, Kay. So as Kay said, my name is Jerry Brito. I'm the Executive Director of Coin Center. Coin Center is an independent nonprofit based in Washington, D.C., and we're focused on the public policy issues that affect cryptocurrencies like Bitcoin, Ethereum, and Zcash. We're very, very happy to be working with the Charity Security Network on a pilot project where we are helping a grant-making organization in the U.S. Use cryptocurrency to send funds to grantees overseas, and we hope to be releasing the results of that in the next year. What I'm going to do today is explain what is cryptocurrency and why it may present an opportunity for NGOs who have difficulty moving funds. So first, let me just explain Bitcoin. Bitcoin is the world's first completely decentralized digital currency, the first cryptocurrency. And the thing about it is we have had digital currencies for decades. If you think about Facebook credits and Microsoft points, or airline miles, or even the dollars in your PayPal account, these are all digital currencies. So what is it about Bitcoin? And when I say Bitcoin, please understand it's all cryptocurrencies. So what is it about Bitcoin that makes it unique, that makes it worth discussing in such detail? It is Bitcoin, again, is the world's first completely decentralized digital currency, and it's that decentralized aspect that makes it unique. What decentralized means is that there is no issuer of the digital currency. There is no company that creates it or runs it. There is no government that runs it. It is like email in the sense that while you may use an email provider to access your email is not owned by any company. It's an open protocol. Before the invention of Bitcoin, for two parties to transact online, to transact electronically, always required a third-party intermediary between them, somebody like PayPal or a bank or Visa. And the reason for this is that you cannot have person-to-person cash. And why is that? If you think about a true person-to-person transaction, it's cash. And it works like this. If I have a $100 bill and I hand it to you, you now have it, and now I don't. And we can verify this by looking at our hands. So it is the scarcity inherent in the physical world that allows us to have person-to-person transactions with just two persons without any third party between us. If we tried to do that electronically before the invention of Bitcoin, what would that look like? Well, we would have to have some kind of digital representation of the money that we were giving from one to another. So if it was $100, we would have to have some kind of $100 digital file, and I would perhaps attach that to a message, the same way I might attach a Word document or a photo to an email, and send it to you. And so when I send you a Word document or a photo in an email, you now have it, but what about me? Is it gone from my machine? No, I retain a perfect digital copy of the photo or Word document that I just sent you. And so if I was sending you a $100 file, I would retain a perfect digital copy, and I could then spend it a second time or a third time. And so it just would not work. This is what computer scientists imaginatively refer to as the double spending problem. And so the way that we solved the double spending problem before the invention of Bitcoin is with the use of a third-party intermediary, so somebody like PayPal or a bank. And what PayPal does is that it keeps a ledger of all account holders and all account holder balances. And when I want to send Kay $100, I don't send Kay a message. I send a message to PayPal, which says, please deduct $100 from my account and add it to Kay's. And PayPal, should faithfully execute that and add it, subtract $100 from my account, add it to Kay's, and that reconciles to zero. And across all transactions, at the end of the day, it all reconciles to zero. And so PayPal essentially keeps a ledger of account balances and keeps a ledger of transactions, and that is its function. And in that way, we can transmit money electronically, but it always requires that we are both in contract with this third party. So enter Bitcoin. What Bitcoin does, its great invention, is that it allows for true peer-to-peer transactions without the use of a third party. And long story short, because I only have 10 minutes today, if you go to our website, coincenter.org, you can find information about how this works technically in more detail. But essentially what Bitcoin does is that it creates a ledger, which is called the blockchain, which is a word you may have heard. And this blockchain is a ledger of all account balances and transactions, but it is not held or controlled by any single party, by any one company or anybody in particular. It is shared by all the users of the network who are connected to each other in a peer-to-peer fashion. And it is maintained by everybody who is connected to the network. And so what that means is that now, for the first time, I can have a balance of, say, $100 worth of Bitcoin, and I can send that directly to Kay, and that is added to the ledger, and you can verify that I have now transferred the funds to Kay. I no longer have them. She now has them, and she's the only one who can now spend them going forward. And this is visible on a ledger that is visible to everybody. And so everybody can be satisfied that there is no new cryptocurrency, no new funds being created that shouldn't be. So the great invention of Bitcoin, among other things, but for our purposes, is that it means that for the first time we now have cash online, the way we had cash offline, right? In the physical world, we had bearer instruments so we could hand to each other without anybody between us. And that was not possible in the digital world. With Bitcoin and cryptocurrencies, you now have that possibility. We can hand each other bearer instruments without anybody standing between us. And so essentially what you have, and in the previous presentations it was discussed how some adaptive measures to the financial system have been to carry cash. Well, Bitcoin is essentially digital cash, so it has those benefits of cash, but with a bit of an improvement in that it's digital, and it's easy to move around almost instantaneously around the world. Once you have Bitcoin, you can send it to anyone without the permission of any intermediary. And this obviously has sort of obvious opportunities for NGOs. For example, you could send money while avoiding the correspondent banking system. So once you acquire Bitcoin, you can send it to anybody anywhere in the world without having to go through any intermediary or any set of intermediaries. You can also send money directly to people and organizations without the permission of a government or a bank. You can just do this, directly yourself, the way that you could send an email to anybody who you wanted to without asking for permission. So those are the obvious opportunities. There are some challenges. While there is no prior restraint, you can, of course, be held to account after the fact for a transaction. So if you send a transaction, but that is later deemed to be illicit by a government, of course, the government can't punish you, but they cannot prevent you from conducting the transaction. Another challenge is that once a recipient, let's say in a developing country, has received the cryptocurrency, they will likely need to convert that to local currency to make use of it. And it's this last mile problem that can be a challenge. It is easier in some places to find an exchange where you can convert cryptocurrency to your local currency. So, for example, obviously in the US and Canada, there are several very good, well-regulated exchanges, also in Europe. In Latin America, it's pretty good. In Asia, it's pretty good. Much less so in the Middle East and Africa. In the future, and this is maybe in the distant future, you may not need to convert to local currency if you develop an economy where you can find vendors who are willing to accept digital currency. That might be a solution. But right now, part of the work that we're doing with the Charity Security Network is figuring out how a grant maker can acquire Bitcoin using a regulated exchange in the US and send it to a recipient in Latin America or Asia, and then help those recipients find exchanges in their localities to convert to their local currency. So with that, I think I'll stop and say that I'm happy to answer questions. And if you ever need to reach me, I'm at jerry@coincenter.org. And with that, I think I've been told to hand it over to Gustavo.
Hey, thank you, Gustavo Rupes from Connect Us in Brazil.
Hi, everyone. I'm Gustavo. I'm from Connect Us in São Paulo, Brazil. I'll talk a little bit about our efforts here in Brazil. So banks in Brazil, they're not fully compliant to the new R8 yet, and NPOs here are facing issues with opening bank accounts, receiving donations either from individual donors to foreign donors, and also problems when we're dealing with the exchange rates between US dollars and Brazilian reais when we receive foreign donations. Our main efforts here are on building knowledge on the new R8 with banks. And also we have been facing issues with the boleto system, which is a huge system with receiving money from individual donors. Banks are changing this system now, and it is making it harder for NPOs to receive these individual donations. So now NPOs in Brazil are building some kind of coalition to challenge these changes and propose we're in the process of hiring a law firm to propose a decree to the central bank to regulate this boleto system that will be more favorable to NPOs to receive money from individual donors. So we'll make it easier now for us to receive money from individual donors and to change this boleto system to in a better way. That's basically it. That's our biggest effort here that we're making now to make the boleto system easier for NPOs, and we're in talks with the central bank for that. Thank you. I'll hand it to Sangeeta, I think.
Hi, Sangeeta.
Lovely. Thank you. Yeah, thank you, Kay and Gustavo. Just a quick update from the Netherlands. If we can go to the first slide, please. There's a genuine interest on the part of all stakeholders to engage and find solutions to the problem of NPO de-risking. And when I say all stakeholders, I mean the ministries of finance and foreign affairs, the three main banks here in the Netherlands, ABN AMRO, ING, and Rabobank, and a diverse group of NPOs from small human rights organizations to the large humanitarian ones. What has been discussed has been the state of play in terms of de-risking and potential ways forward. Sue has already mentioned the World Bank ACAMS process, of which we are a part. The other ongoing discussion forum is RELEX, which is the working party of foreign relations counselors of the EU countries. And this RELEX group, sanctions group, is discussing the negative impact on NGOs of the international sanctions regime, as well as of the countering the financing of terrorism measures, of CFT measures. And some of the recommendations that this RELEX group has come up with includes, again, some of the things that Sue mentioned, so increasing awareness amongst all the various stakeholders. In terms of licensing and financial solutions, it involves collaborating on a workable and safe licensing system and creating safe payment channels. And in terms of legislative options, it's exploring ways for potential exemptions in the sanctions legal framework. For example, the Somalia resolution, which has exemptions for humanitarian relief. So there is a match between what is being recommended at the World Bank ACAMS level and by the EU RELEX committee in terms of safe corridors, etc. And given the slowing down of the World Bank ACAMS process to a certain extent, it may be, given it's more difficult to change practices for regulators and banks, it might be quicker to gain some momentum on the issue within the EU context. So there seems to be some scope for traction here. The Dutch are taking the lead on this within the EU, and there is a huge appetite for this within the Netherlands. And given the Dutch sort of consensus-based approach to working, as I was mentioning, there is scope for traction here. The next multi-stakeholder meeting has been set up for the new year, and involving all the stakeholders that I just mentioned. And 2 case studies will be discussed at this meeting to get a more concrete grip on where the problems arise and pinpoint where exactly in the correspondent chain or otherwise the problem lies. So that's it from here. I'll hand over to Hannah now. Thank you.
Okay, Hannah Sermatz, the European Foundation Center on the EU.
Yes, thank you. Yes, I think it's very interesting to see that that kind of the multi-stakeholder approaches is happening at the national level, and there is also, as Sangeeta said, there is some more movement at the European level. So I wanted to update you on some EU level towards a multi-stakeholder approach. And just to put this into context, the European Commission has done a supranational risk assessment, which is foreseen by the Money Laundering Directive. And this was looking at different actors, different players, different sectors to check out potential risks for terrorism financing and money laundering. So they wanted to analyze terrorism financing risk and money laundering risk in a broader perspective. And this was for the first time undertaken, this EU supranational risk assessment. It was over a one-year process, and the European Commission had reached out in this process to a smaller group of NPOs, so some NPOs could provide input into the process. The NPOs that participated in this process also raised the issue of bank de-risking as becoming more and more an issue for NPOs and philanthropic money flows to move forward. So the supranational risk assessment report was published this June, and it kind of concluded that NPOs may be exposed to risk of being abused for terrorism financing purposes, and it considered the transfers outside the EU to even be more vulnerable. And the kind of the threat and the vulnerability related to NPOs, looking at the collection and the transfer of funds, was considered significant. The good news are that the report mentioned the concerns that we also raised during the process of the drafting of this report, that some financial institutions are reluctant to provide parts of the NPO sector with financial services. So the issue of bank de-risking was picked up in this public official paper. And then maybe moving to the next slide, the report also included some mitigation measures. And for the European Commission, it included some concrete actions for guidance and training for NPOs that receive EU funding, but it also included some action from the European Commission to organize a multi-stakeholder exchange involving different sectors, so involving the financial sector, businesses with NPOs. And in this context, the idea is to look at risks, how risk can be addressed, but also to look at the issue of bank de-risking. So we want to kind of take the Commission to a word so that we can organize this multi-stakeholder conversations. We know that also the humanitarian sector is already moving in this direction, and there are other NPO representatives very interested to move this on. And we would like to discuss with the banks, with the European Commission, kind of what already charities are doing, what are existing hard laws, what are existing soft law measures that are put in place, how are potentially technical solutions to the problem, and ultimately, as we sense it, and we've already been discussing also with the European Commission, that it is ultimately an issue of risk sharing. So we hope that we can get to a better understanding and to a reasonable risk sharing with the banking sector. So we are now looking at ways to engage into this multi-stakeholder conversations, which should happen in the next year.
Thank you so much.
I'll hand over now to the next slide.
Yes, Miguel de la Vega from Mexico was unable to get an internet connection, so Andrea Hall will present his slides.
Hi, everyone. Miguel has sent me some written remarks that he asked me to read to you. The financial restrictions in Mexico are mainly based on information requested by the government from civil society organizations. This information creates conflict with privacy concerns. A failure to comply results in heavy fines. In order to make changes, the CSO collective, named UNID OSC, had to gather information on both national and international cases, articulate with other sectors, mainly academia and law firms, and build a dialogue with decision makers, including the public officers at the Ministry of Finance. The bank restrictions are based on de-risking practices by major banks, not on provisions in law. Civil society in Mexico has expressed their concerns to the Financial Intelligence Unit. They are in the process of submitting a recommendation to banks based on the need to include civil society organizations in the financial system. Finally, we need to disseminate the information about the situation to organizations broadly and to inform smaller banks about the importance of inclusion of civil society organizations. And I'll hand it over to Steve Harvey.
Thank you, Andrea. So from Save the Children's perspective, I just wanted to explain some of the work we're doing with banks to ensure that their kind of any potential de-risking strategy is mitigated. So most of our work with the banks has involved more recently in an extended due diligence process. And what I mean by that is by establishing some of the kind of conditions and expectations from a bank to give them confidence that we undertake the controls and the due diligence processes that we need to stay safe. So that could mean giving them assurances around resourcing of internal audit systems, controls over payments, sanction screening, etc. So this takes form in a kind of questionnaire, a schedule of questions, which is something that Sue referred to earlier. And it's about agreeing where to set the bar to ensure that they stay servicing us as a relationship bank. So a lot of work's been going on around that. Part of the outcome of that process was to agree a pre-approval process for any payments that we're making to heavily sanctioned countries such as Syria, North Korea, etc. So now, before we even submit an instruction to make payment, we go through a pre-approval process to ensure that they're happy and we're happy that the entities we're paying have been screened appropriately and it's paying for goods within the realms of humanitarian activity. So that's a process that has become less clunky, slicker and slicker as we've gone through the process. The background to all of this is to ensure that you have a longer term relationship with your bank. We found that getting them to understand our programming goals and really kind of buying into some of the work we're trying to do, projects we're trying to do in higher risk jurisdictions has really been valuable because suddenly it gives them an appetite to maybe become a little bit more flexible and a little bit more engaged in some of the work we're doing and some of the kind of banking solutions that we need from them. So that's been a really kind of interesting dynamic that's really grown over recent years. What does help is obviously us understanding where they're coming from too. So a good understanding of general bank regulations is always handy, and also you know, understand where your business relationship is going and whether there is some form of financial opportunity for them to expand the business relationship as you go forward is always useful as well. Now on the second slide, relating to that is some of the work we're also doing with government. Government are very engaged now with the de-risking piece in the UK. So we've recently had discussions with them to start to form a working group that kind of mirrors the World Bank ACAMS work streams. And what's been agreed is that we'll have a general working group where representatives from government departments, NGOs and banks sit in these work streams. And there's three subgroups that provide the work streams. And the first one is around guidance and legislation. And primarily that's to provide greater clarity around legislation, how it works and where it applies. The second subgroup will look at training and professionalization. And what that means is to identify any kind of bespoke training needs and ascertain where the level of regulatory knowledge is within NGOs and where there is a training need. And the third subgroup is an innovation and information subgroup. and that's to really focus on sharing knowledge and information through some form of exchange hub, and to look at new innovation, new ways of working, to see whether we can find more effective ways of transferring funds in a safer environment. So that's where we're going at the moment, and it'd be good to feedback to you guys as that progresses.
Thank you so much. It's really inspirational to hear about what's going on in other countries. And one more, Don Sikorsky from Islamic Relief USA, to talk about what's going on at the US level. Don?
Thank you, Kay. I'm going to skip discussion of the World Bank ACAMS since that's been well covered, and just talk about the Together project and the Government Accountability Office internal audit that's happening.